Hello, everybody. This is Mickey Mao. It is December 18th, 2024, going into the Christmas holiday next week. It is Wednesday. Let's see here. Bitcoin took a little dumb skis, but today we are going to be talking about the newly updated Market Smasher. We renamed it the Market Smasher, and then we have another indicator called the Market Smasher filter. So the Market Smasher is now version 1.5. Join the Discord. You can join the community by going to www.cartoonmoneyprinters.com. Click the Start Now button, and from there you'll get the onboarding process through whoop.com. You can get a free month trial, as well as we got some sales going on, so seriously consider doing that and jumping in there. I am joined today by Astronaut Toad. How you doing, Astronaut?
I'm good. Bitcoin just crashed again, and I decided to throw in a bit of a long, just to kind of get some excitement on Friday night.
Nice.
I'm only
it's
risking
Wednesday.
some of the massive. Oh, hey, it's not Friday night.
Yeah, you're usually our Friday guest. So it seems like a Friday, doesn't it? It's weird. But let's see. Without further ado, let's go ahead and pop your screen up, and yeah, go ahead and take it away, my dude.
Yeah. So I finished working on the newest indicator for our private Discord, and it is called Market Smasher. So I'm going to switch here from my Astronaut beta version, hit remove. Oh, do I need to go into the website, or do I just hit update and refresh on this?
Let's try it.
I've already claimed the indicators.
Yeah, and it was an update to the indicator, so it should update. Let's just troubleshoot live.
Okay. Invite only, Market Smasher 1.5.
Yeah.
Here we go. All right. And if I'm not mistaken, there was a signal. There it is. Still valid. There was a signal on the 1 minute chart playing out right now. And it's still going. It's at about, what are we at right now?
Do you want to drag? It
just tapped one. It's past a 1-to-1 risk reward ratio right now.
Do you want to drag its right square all the way to where price action currently is? I know it'll look ugly, but
I don't know what you mean.
You can actually get the trade position tool and then show it in its activity.
Oh, there.
Yeah.
Yeah. So let's go over the system, the strategy. I hate to call it a strategy because I prefer to call things systems. until they have, I don't know. I've been designing systems and workflows for 15, 20 years now. So I just use the word system as opposed to strategy because it feels a little bit more flexible and it helps people understand that things, and especially in trading, are a little bit more flexible. So hold on a second. I'm going to stop this fan from oscillating. It's driving me nuts. All right. So the way the Market Smasher works is very simple. And it's all based on calculating low volatility, which is basically dead price action. We can go to, there's some great examples. What do we got? XRP did a great example. Let me see. Where did I do my technical analysis on XRP lately? Is it on here? Or was it the perpetual future? Yeah, there it is. Got a lot of random stuff here. Let's delete that. But you can see here, during this pump, we have these gray shaded areas, and they are coinciding with some, not all, of these orange blobs, okay? And let me make my screen fit the aspect ratio. Bitcoin down. All right, all right. I'll pull up the Smasher again, and we'll. Oh, look at this! I got par and pivots here. I got. I noticed that the names, the indicators, or your setups can be. They can have emojis now. So par and pivots got the little golf icon. Thought it was being funny there. And Smasher got the hammer icon, of course. All right, let's see what Bitcoin's doing. It's just setting off my alarm. That's all it's doing. All right. So let's look at XRP here. We've got these gray shaded areas, and we've got these orange blobs. What the Smasher is, it's the squeeze indicator turned into a visual representation on screen. And so you see these orange blobs right here and right here. And then there's another one right here as well. Let's hide everything else. And these orange blobs are a measurement, a mechanical measurement to determine when price is low volatility. So usually that just means price is flat, and you would think that when price is flat, that doesn't necessarily mean anything. It just means that it's getting boring. Well, that actually means low volatility means usually that price is compressing and pressure is building up. And that is released in the form of a big move. That's what happens when you have a massive pump like this. And you can see there were some signals before this massive pump started. There was a squeeze orange blob down here, and then there was another one here. And these gave signals, but then price failed or faked out to the downside before this massive pump started. And that happens from time to time. The moving averages were all aiming down, and I would have traded these short anyways. Like, they were probably, like, if you got in on these trades, you're getting 6%, 10% down, 10% on 10x leverage is 100% move. So that's not bad. But anyways, let's go over what's happening here. This is calculated using Bollinger Bands and Keltner channels, which I have hidden them because they're irrelevant. You can just barely see the purple lines. They are irrelevant to this system. They're just a way of calculating or comparing average true range and standard deviation. And those are just two measurements of volatility. And I pulled this up before where, let's see, I'm going to hide the money minter D. I'm just going to pull up the standard trading view indicator for average true range. I guess that's not the standard. But anyways, you can see that to some extent, when ATR is low, that means that it's sort of coinciding with these squeezes, but not always. Like you have a low here, and that coincides with this high, but it doesn't really give you a squeeze. And then you can see that ATR is very low this whole time. But anyways, ATR and standard deviation are just two measurements of volatility, and when they're low, they mean something. But what we want to know is when price is truly building up pressure for a big move. And what we found out was these squeezes that don't just get flat price action, but they get tighter and tighter and more constricted. I think there was a great example here. You can see how this squeeze right here doesn't give a signal, because I'm going to switch my color to orange here, because price is just kind of wiggling along and it's not really doing much. It's just this parallel channel dead price action. It did give a move, but it didn't give this tightening effect, which you can see happens here quite clearly. And here it's narrowing down and you're getting more and more of this. I'm just going to really scribble on this to drive home the point. You're getting this really constricting or tightening effect on price. And that is our filter that hides most or at least a lot of these squeezes. You can see there's this orange blob here, there's some orange blobs here, but these are filtered out because they're not good enough to trade. What we're looking for is these really tightening effects, and we get two of these signals here and here. This one I wouldn't have guessed because it looks like two parallel channels. But when this orange blob generates the gray shading, what that means is that the squeeze has gotten tighter to the tune of, my default is somewhere around like, I've been playing with 20, 30, 40% tightening. So when you get the gray shading firing off, that means that the squeeze has constricted by 20 or 30%. And that is your signal to say, hey, it's time to look for a trade. And in this case, with it just mooning, and this has been an alt season kind of situation, this would have been an obvious long. And so that's how you trade the squeeze. That's how you use the market smasher to find trades that are better than any old average squeeze. So what we do is, as soon as you get a gray shading on the background, you don't just just smash the market buy button or sell long short. You wait to get into the trade by either analyzing, you zoom in on this area here and find a trade on the smaller time frames. We're on the 4-hour time frame right now. So just these two candles here would give you 8 hours well, this candle has to close first. So this candle is giving you 8 hours, and this candle is a little doji. You've got 8 or so hours to get into this trade and find an entry, and you're going long. What I like to do is I put my entry not as a limit order. I don't enter it in market. I put it as a trigger or stop market order, which means what I do, I'm going to hit the up arrow to just bump it up a tiny bit. And so what you can see is price, the trade did not get entered until the next candle when price broke above that high by just the tiniest bit. And this can save you a little bit because if I started here, then I wouldn't have gotten into that trade. And then if I moved my entry down, I wouldn't have gotten in that trade because price never broke that high for 4 hours. And then I would have put my entry all the way down here. And when price breaks that high, I'm in the trade. Then you put your stop loss below whatever low, swing low was around during the course of this squeeze. If it's right here, this is an obvious swing low. It might go all the way back here. Put it under a low like this, because what I want is I want to notice the squeeze right here. And I like to have my stop loss be underneath the squeeze cloud, because this thing can fake out. And your best defense against a fake out is the squeeze cloud. These are Bollinger Bands and Keltner channels offering some sort of dynamic support that will kick price back up. And you'll see it all the time on different time frames. If you get a squeeze, you'll see it get into it and then kicked back out. But so that's why we're putting our stop loss down here. You could put it under this low if you wanted a really tight stop loss, but only in a really strong trending market. But anyways, I'm going to put the stop loss all the way down under here. And then I'm going to target a 1-to-2 risk reward ratio. That's my first target. And at this point, I'm closing 50% of the trade. So if I risked $100, if this distance from here to here is $100, then that means that this distance from here to here is $200. So when I close half the trade, I am locking in $100 of profit. And also I'm cutting my trade size in half. So my risk is now just $50. And also, if price is all the way up here, you better believe I am moving my stop loss to this other low. So I went from a 10% drawdown to a 5-6%. So I'm not only is my risk $50, it is now $30-ish or whatever. So I've locked in $100 in profit, and my risk is now only $30. If you're really tight on funds and say you're risking $10 and you're locking in half of your trade here, so you've got $20 here and you're locking in $10 worth of profits, you might just move it to break even. So there's zero loss and you've locked in your $10 or whatever. If you're really tight on funds, you're trying to grow your account, you want as many possible wins and as few possible drawdowns or losers, then you can move your stop loss to break even pretty quickly. Because that is the whole point of why I like trading the squeeze and why I created the Market Smasher, to find good trades. And that is, when this thing explodes, it is supposed to go. I want my stop loss back. There we go. The whole point of building up pressure is that it's going to rip and it's not going to come back. Because I found myself, when I'm entering trades, if you've got some nasty, dumb price action just kind of going like this, and it's like right next to your stop loss, and you're like, well, my strategy does work. I know it. I know my strategy works, but your stop loss is like right there, and you're just, I know for me personally, if this gets down here once and comes back up, I'm going to close the, or if it gets down here twice and then comes back up, I'm closing that trade at break even, the whole trade, and I'm just frustrated. I'm walking away, okay? So my style of trading or my emotional disposition led me to trade this style. I like it because if this signal, this gray shading, if this fires properly, there should be no question. It should rip straight to a 2-to-1 or 1-to-2 risk reward ratio, and it should not spend much time. It should not come back. And so that's functioning, that's the system functioning properly. So therefore, you don't have emotional trauma if price is just hanging around here. You're like, if price is doing this, that just means that the squeeze failed and there's no question. I should not be in this trade, whatever. And so you either just let it get stopped out or you walk away. Either way, it gives you a lot more security and confidence that when functioning properly, this thing should just go. And the same thing happens here with this next signal. You've got your gray shading, and I'm going to put an entry. My magnet tool is turned on, and then I just tap it there, and then I hit my up arrow to bump it up a couple of notches. So we're at 1.4850. I might bump it to 851 and call that good. And then here's a nice stop loss. It's below the cloud. It's below this swing low. I'm going to calculate my 1-to-2 risk reward ratio. And then I'm going to move the stop loss down just a tiny bit more. I don't know why. That's probably more of a psychological thing than a mechanical success rate thing. Because these things, when they go, they just go. And then when you have closed half of your trade, the next thing you do is you target a 1-to-4 risk reward ratio, which you get on here and you get it on here. Let's see. There's my 4.0. And at this point, you're just printing money. Okay. So at this level, you can choose to close the whole entire trade, or you can use market structure or the EMAs, or I have this blue adaptive or Kaufman adaptive moving average, where you can use it as a trailing stop loss to come up, and it actually closes it right out at the 1-to-4. Right here is where you would get stopped out on this moving average, or you'd get stopped out on this moving average here. Anyways, you can fiddle around with the settings here and tighten this up so that it gets right up underneath there. And, you know, if you wanted to get stopped out higher up. But anyways, at the 1-to-4 risk reward ratio, you can close the whole entire trade, or you can just close another half of the half. So you're closing a quarter of the total trade, and then you're letting the rest of it just run. Obviously, at this point, you're moving that stop loss into profit. I'd probably put the stop loss underneath this low here and just let it run. So I'm locking in profits. I already locked in profits at 1-to-2 risk reward, and that's how it works. Did I miss anything? Do we have any questions? Yeah. I'm going to check the chat and see if there's any questions in the chat room. Yeah. Go. I'm going to check the private Discord and see if there's any questions. And now I want to add. Oh, did I delete ATR? I'm going to put Money Minter D. Oh, no, I accidentally hit Pivots Extreme. The Money Minter D is our momentum slash money flow indicator that gives you great signals on, if you like oscillators and bullish bearish divergences on multiple things, this will give you divergences on RSI, that's the purple line here, and then also on momentum, that's the grayish lines here, and then money flow, which is the light blue and pinkish, purplish. And so I use that sometimes as confirmation for a signal. So for example, this bearish divergence wouldn't have printed yet, but if I'm looking at this right here and I see this, not sure why it didn't print. Well, I'm looking at Heiken Ashy candles, so that might have been a weird thing. But right here, if I see this, and then whatever the candles are doing here, it might not have given a true divergence, but this is one way or another. This is kind of a flat line situation here. This just adds to my confirmation that, yeah, you know what, we're bullish. This is a bull div. This is money flow is in the green. It's positive. And we're definitely taking a long on this trade. So that I just add the money minter as a bit of a confluence. And sometimes I also check the par. Let's go back to the 1 minute. I want to check Bitcoin, because I have a trade on. Did I get stopped out yet? Maybe. That was brutal.
Yeah, right now I don't know. I don't think the bottom is in yet. So I mean, if you're doing a quick scalp, yeah, but not financial advice for anybody. Um, right now I think it's like knife pinching territory.
Yeah. So I'm just spending some of my profits on the short I took from the top, and I did want to look that up and show you guys what I did earlier. Let's see.
We haven't even had. We haven't had two back-to-back greens. Wait, yeah, we have. On the hourly, we had two back-to-back greens, but they were both dojis.
What's going on? Oh, I got an ENA long. That's what's happening. Oh man, I'm not. Yeah, this is not good. I need to de-risk some of this. This is going to crash a little bit more.
Yeah,
all right, let's
I'm
see.
seeing a level at 98, 425. I think price is going to make its way there for sure.
Okay. Yeah, we got a pretty good track record of finding trades live while we're streaming. So,
yeah,
I just don't always take the trades. So let's scroll back and see what went on at the top here. We had this pump, and then this was just getting bear div to high heaven. There was this bear div, and then there was this bear div, and then this whole thing is its own bear div. If you straddle all of this, you've got a even bigger bear div right there. And so after this high got put in, and then it came back up, and I got in short somewhere around here. I might have waited till this little pump and got in short around there. That's it.
Yeah, I got levels going all the way down to 91.
Oh boy.
And it is okay. So this is something that I experienced last year. Before the holiday, the market makers like to sell their profits for the new year and sit for the holidays on their profits. So it's I've been suspecting this for a couple months now since Thanksgiving.
Yep. So, oh yeah, there's a nice short signal on the market smasher right there. I guess I got you know what? I think I used the par and the pivots to get into this short. I don't know if there was a short signal. I feel like I saw one, but now I'm just not seeing it. 1083888. Oh, that's another thing that this is like totally unofficial intuition based stuff, but I watched the Coinbase spot chart for BTC and I look at the highs and lows that get put in because Coinbase is one of the largest institutions for crypto trading, and they have the massive market makers who have multi-million-dollar orders. I don't know if it's on the books and if it shows up on the depth chart, or if it's behind the counter, so to speak. But what you end up seeing is these perfect or interesting numbers. Like this isn't coincidence. 108, 3, and then 8888. I feel like somebody had somebody with a lot of money typed in an exact number, and when that price got hit, they opened a market order to sell a ton, and one or just less than 10 people with massive amounts to sell caused this whole rip down here. And when that happens, I look at the volume traded. You can go in here and see the volume traded was, pull this up, 170 Bitcoin, 150 Bitcoin, 120. So 1, 2, 3, 4, 5. So 6, 7, 800 Bitcoin got dumped onto the market right there. That's a lot. I don't know what the math is on that. But anyways, so that's where I got in, somewhere around here. Yeah, I think I traded down one of these squeezes that didn't give a signal. I switched over to the par. Oh, no, that's not the par. This is Charta. Nobody's commented on my meme yet of this is Charta.
I saw that. Yeah, I laughed.
Okay, looks like we got a little bit of a bounce here.
Yeah. We got on the 1 hour. It looks like we might have a bullish divergence forming on the money minter.
Yeah, I'm looking at Hyperliquid, and the trading volume has really picked up on the 1 minute chart since the last little crash happened here. Same as here.
Do you want to just do a quick summary of the market smasher and the market smasher filter?
Yeah, wanted to check the pivots and the par and pivots.
Somebody throw a coin at us that you want us to look at with the smasher.
Yeah, so this is where I was switching over to the par and looking at it given this bear div and just rolling over here like this. And it just kept rolling over. Might have gotten in on this. I saw this bear div on the 3060. And then I might have gotten in on one of these, on this right here. This bear div. And then there's this bear div as well right here on the 3060 and the 15. And then the 4 hour was just charging down. So that was it right there.
It looks like we got people that are trying to keep Bitcoin above 100K.
Yeah. Well, I got bad news for them. There's too many people who are greedy and want to take profits. So yeah, I don't know about that. Oh, it's below it. Check this out. This is below this is a monthly pivot, I think. What is this, weekly or monthly? Oh, this is weekly. Let me see what the monthly is. Oh, the monthly is way down there. Oh boy, 92. Yeah, hello. We might revisit that pivot. Okay.
I can see that.
The weekly pivot is what we just slashed right through. Look at that. And then the pivot extension is at 97,400-ish.
I can see that. That's where I'm calling
where
we're gonna land at. We're almost there, but 98 for 425 and then 97.9. Like there's gonna be a little golden zone right there where I think it's gonna rebalance.
Okay, time to de-risk some trades here because I accidentally got a little bit overzealous on longs. This is in profit. We'll take profit on that.
We have to also keep in mind the FOMC results. So that was something else that happened.
Oh yeah.
Today, which once like news like that comes out, the market's gonna try to find a new place to range. And we've been in euphoria for the past since the election, so I could see some rebalancing, some corrections going on.
Yep. So, ooh, yeah, let's check out Floki. Hey, that would have been a tough signal to take there on the 3-minute. It's a little bitty squeeze. Man, when you see a dude like this, where the squeeze starts, but and it gives a signal right away, I tend to consider that to be a mathematical error in the calculation, possibly, because it's using these two different values, and it might be using a slightly incorrect value from this other candle here. But anyways, this is a good enough signal by the time you get one or two in anyways. And the moving averages are all stacked bearish. So even though this crosses above the moving average, I would say that's a fake out, and then you grab it somewhere right in there to short it right there.
We got somebody testing out the market smasher for a trade right now on the 15-minute on Doge, and we also do you want to do your synopsis, your summarizing of the smasher and the filter on AR?
Oh, there's a trade on Doge, and then it crashes, and oh, down it goes again. See, look at this. We got one candle of signal, and then now it's down. I am hesitant to short here because it's already fallen so strongly. Like, you had an amazing signal up here right as the moving averages were all rolling over, and that was a great short signal. But now price has come down. Let's see what this got into.
There's a beautiful bear div on the money minter.
Right there?
Yeah.
Over here?
Yeah, look at
or earlier.
Right there. It's the one closest to price action.
Oh yeah. That's just That's a good signal right there. Well, we kind of discussed how like when these squeezes are exploding, just like blowing out and opening up, they're really hard to trade. And so that's why I created this visual representation of the squeeze. And I probably would hesitate to take this trade just purely based on a squeeze signal. I would have to go and say, hey, yeah, there's a bear div. I'm in a short. And that would give you a better entry. Like you'd be getting in somewhere up here. When you see this start rolling over, you'd be getting in somewhere up there. And so you'd have a real tight stop loss. And you would hit your 1 to 2 really quick. Of course, this is not representative of usual, like the market doesn't move. Well, altcoins can move 10% pretty often.
Yeah.
But you're getting a 1 to 8 risk reward ratio on that trade. So here's my thing. When we're already looking at, that was a 1 to 8, this one is up to a 1 to 10 risk reward ratio. You're up 14% on this thing. When you've already got these multiple amazing signals, I'm scared to take another one on this third try here because it's already potentially exhausting itself. However, market money flow is down. This bear div or this bull div just got invalidated because this low is lower than this low. So yeah, that could be a short if Bitcoin doesn't find solid ground soon. Then
Yo, Death, do you mind muting yourself? Thank you, buddy.
yeah, let's see what Doge is doing on the bigger time frames. I feel like because Doge pumped so hard earlier, however many weeks or so ago it was around election time, there has been some dead price action. But this has got some great examples. On the 1 hour, it gets good. You can see this classic example of this thing is just compressing and compressing and compressing. So there's a handful of ways that you can get into a trade and keep your risk low. Okay, so let's recap on this. We've got a signal, a gray shaded background starting right here at this candle. I'm going to do Alt B to
And that
create
is
a
with
line.
a market. No, that's the market smash that's giving you the gray signal.
Yes. And I'm just saving this as a template. So this is where you are getting the signal. It's starting right there. And it kind of comes and goes. So you might not know what to do. But then when you see, let's say you don't show up and notice this until here, and it's starting again, you've got a couple of options. You can get into the trade by just saying, I'm only going to enter if it breaks one of these highs. But you got some prices just kind of wiggling around here. So you might get in at a quote unquote bad entry if you somehow just get in at by the top of this pump right here. You're still not going to get stopped out because you got your stop loss below this low here at the beginning of the squeeze, and you're targeting a 1 to 2. Oh man, you just barely missed that. But if you had gotten in correctly, yeah, if you had gotten in correctly, you would have won the trade, 1 to 2 risk reward. But the other thing that I like to do is I like to just put a quote unquote stink bid entry at the bottom of the orange cloud. And when this orange cloud reappears, you put a limit order down there and you put a decently tight stop loss, you're only risking half of your normal risk or a third or a quarter of your normal risk, because what you're going to do is you're going to let it ride for that original profit target, wherever that was, somewhere up here. And so you're going to get an incredible risk reward ratio by trying to catch a tap of that lower squeeze cloud. Or if you're going short, then you would put a short limit order at the squeeze cloud upper. And so now you could get in for one risk factor here, and then you're adding a third of a risk factor or something down here. And that's giving you a really, really good trade overall. And when you see it going like this, and it's just doing this fire hose nozzle thing where it's just tightening like that, and it just is smoothly tightening, then that's your confidence booster to go, all right, you know what? I'm going full risk factor, maybe even 2 risk factors. And then when it goes, it goes. Now, this one only got to 1 to 2 risk reward ratio, which is why we use market structure to move our stop losses up and all that good stuff. We're closing half the trade. That's probably what I would have done here is when this hit, I would have, because you had some pretty good clean market structure, and then this broke here. So what are we on, the 1 hour? Market structure broke that 1 hour high. So I would have put my stop loss below that low. And so this trade would have gotten fully stopped out up here. Or if you had let it hang on until the moving average, funny how that always seems to work out, you would have gotten stopped out right around here instead. Either way, you are a fully profitably closed trade, or your whole trade is closed in profit, even though you didn't get the 1 to 4 risk reward ratio on the original entry. And this one's a beautiful one. Look at that. Just, I told you, this is why I love this strategy, this system, is you enter and it doesn't come back. You are stop loss above that high. Oh, looks like you got stopped out on this one. That's a late entry, though, because it just doesn't come back from there. I suppose we could cheat and we could say, you know, this squeeze is going all the way back here. I should probably play it safe and put my stop loss above this level somewhere up here. This is a nice key level. That's, hindsight is 2020 because now we know that this thing just tanked. But that's part of the principle, is that's what makes it subjective. And that's what allows you to have an edge, because if it was 0% subjective and it was purely mechanical, then some $1 million hedge fund or $100 million hedge fund would have already pointed an algorithm at this edge and exploited it into oblivion, and we wouldn't be able to trade this strategy. That's how subjectivity saves you in deciding, hey, you know what, this time I'm going to do a tight stop loss and I got stopped out. Next time, sometimes I'm going to put my stop loss above the cloud, and it's kind of, I got to make a decision because the cloud starts and stops here. That element of subjectivity and wisdom is what allows you to maintain an edge in the market. And you may have to adapt with time, because there may be algorithms that exploit, there's probably got to be an algorithm that exploits some form of the squeeze. It's a very popular idea as an overall concept. But knowing how to adapt and just kind of knowing how to test things out is always going to be key for any strategy. So hit me up in the private Discord if you have any questions about how to use this, or if you see a setup. What I do is I just go and I find my favorite coins. I'm going to pull up on a different window here. I'm going to pull up coinalyze.net, and I just look through the top coins. What's this? AKRO is a coin that really boosted. Did we look at that already? No, somebody asked for Floki. That's what they asked for. So this coin had its open interest go nuts within the last 24 hours. What that means is I'm looking for a trade, and look at that crazy trade volume. Oh, there's a long, annoying squeeze. When you see this, man, that is just some wild price action. It's clearly got some sort of algorithm going on. Look at that precision. I don't know. I don't like this. Yeah, when you see it just constantly constricting, like it's spending almost 50% or more than 50% of its time constricting on the 4-hour chart. And then it does these stabs up randomly, so to speak. That just screams market manipulation, and somebody owns most of the coin and they're just trying to start a pump, and then they're just dumping that pump over and over and over again. So I might not trade this coin, but it does give signals a lot.
You want to look at AR?
Oh. Yeah, let's see. Does it have virtual futures? Yes, it does. So we're on the 4-hour chart. Let's see. Oh, it gave a signal before this massive pump back here. Oh, look at that. Yeah, here's another one of those pump and dump scheme things. Look at this. Look at all these signals. It's just, it squeezes and then it's just blah. It squeezes and then it just dies. This is dead price action that is really hard to trade. And then when it's just finally down to absolutely nothing, and you get this silly little fake out here to the downside, and then it just starts ripping, absolutely ripping. Did give a squeeze there. And you can mess with the settings if you want to try and see if you can get signals on some of these other moves, but I tried not to overthink it, and there will be enough coins that give you a perfect signal on a squeeze that leads into a massive move that you don't have to overthink, like, oh, I missed this pump, how come my system didn't work? There will be plenty of pumps that the signal fires off perfectly for you. Here, let's go down here and see what's going on. AR. Oh man, that thing just died. Yeah, when these squeezes just look like a flat line of nothing, like you got a banana split here or something, some tapeworm, I don't know, some nasty looking thing, and it just happens over and over again, that's when I'm like, yeah, you know what, price action's not, whoever's trading this coin, they're misbehaving, you know, they're whatever, degenerate, reckless gamblers, or they're just a whale who's manipulating the coin price. I just kind of leave it alone sometimes. So that is partly why I mainly just stick with the general top coins that are most traded. Let's see.
Yeah, you'll have
Market
less
cap.
like major manipulation on the like large to mid-size market caps. I think anything below that, you can put in stink beds for whenever they try to do the spike and try to play the spikes. But at that point, I think it's just straight gambling. Um, Other coins that are like at $15, like Link or more. I don't know what Link's at right now, but those ones have good, I think, institutional backing and stuff.
Yeah. BNB has huge trading volume lately, and you can
Yeah.
see great signals on these moves. This one gave a weird signal there. Not sure how that fired off, but then you can see that this one, just a solid thick squeeze, and then it just dropped. This might all be a fake out to the downside. If I didn't know what I know about the FOMC and the global economy or the US economy forecast and Fed rate cut outlook, I would probably be saying, hey, this looks like a great fake out long, and I'd be getting in long for it to go to the moon from here. However, because we know that there's a pretty significant bearish sentiment in the economy right now because of the Fed announcements and stuff today, this is a moment where I wouldn't go all in. He pauses to look at his trade that he should kind of risked a little too much and finds out that it's up 40%. All right, now, okay. Yeah, so I'm only risking some of the winnings from the short earlier, but yeah, good times. So that's why I'm basically just sticking to BTC, XRP, ETH, Solana, BNB, whatever main popular coins are really heavily traded, because those are the coins that, yeah, they might not go, 500%, but they're going to behave more. If I'm looking for a 500% move, we talked about that last week and how to trade on spot and how to find crazy moon pump coins. Oh, hey, I got to check Cook. Meth protocol. Oh my gosh. I thought it was Cook Finance. DeFi Llama. You gotta be kidding me. I was just laughing as I was saying not financial advice because the coin is literally Cook Meth.
Yeah.
Is this it? Yeah, that's it. So here's an example of a squeeze on the 1-day chart. And I have an order set waiting down here. I have one order down here waiting. And then I had another order get in. Oh, I think I can see it. Where did I enter? Somewhere around there.
Losing bandwidth.
There it is. Yeah, so somewhere around here I got in on that one, on the 1 hour. There was a squeeze there. And it went up. I don't know if I don't think I closed any of it. Whoops. It's a spot trade, so it's only up 30%. But I should have definitely closed some of it up there, or this market structure. But generally, these degenerate meme coins do not behave well. And so if you're using a strategy to trade them, you're not scalping. You're buying them on spot. You're using the squeeze. You're checking the market smasher for a signal. on the 1-day chart or the 4-hour chart at the smallest. You ain't getting in on the 1-minute chart like you can do with Bitcoin or Solana.
And you're essentially looking for the swings or the pumps. All right, let's call it here.
Yeah, I'll be in the private Discord for a little while this evening. If you guys have any questions, or hit me up if you see anything. We got a message here. Is this an announcement or what? Yeah. Okay.
You huck to a coin.
Oh, that coin, didn't that coin die like horribly?
Well, it was not a legitimate coin. They just literally just cashed out.
Yeah, I know what that chart looks like. I've seen that before.
Yeah.
I've thrown $10 at coins like that, and then you come back the next day and you're like, my $10 is 30 cents. What happened? Like, yep, it's gone.
All right, everybody.
You're still holding.
Thanks for joining us this episode. We'll take it to members only now. Yeah, sign up with www.cartoonmoneyprinters.com, and then you can also try us out for a month by clicking the Start Now button for free to see if you like what we have to offer. We have a suite of indicators, I think like 6, 7 now, and other things cooking. So yeah, come hang out, come check us out. Will we have an episode Friday? Or do you want to take the weekend off?
Yeah, let's do Friday.
All right, we'll see you guys on Friday.
What is Friday?
The
what day 20th? Is Friday? 20th. Yeah, okay, we're good.